Ladies and gentlemen, this is an urgent update. We've just got new information that there could be 2 more banking failures happen in 24 hours, or if not, this week. The mainstream media and all the banks are trying to tell you that everything's fine, there's nothing to worry about. We're even having news analysts like Jim Cramer telling you to come in and buy, just like he said about First Republic Bank. But people, do not be deceived. Why they're telling you to buy, everything's sound, everything's fine, they withdrawing their money at a record pace and heading for the hills. And if the Federal Reserve lists interest rates again tomorrow, this is going to make the assets on these banks fall even more, and it's going to mean there's going to be more bank runs and more bank failures. So everyone, what 2 banks, in my opinion, are the next to go? Who should you be paying attention to? And will this lead to even more greater bank failures? Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, first things first is this, everyone. Regional bank shares plunge on fear of more rescues to come. So we just had the 4th bank failure in just a couple of months. And people are saying, well, look, that's the final one. That's what they said after the first bank failure. They said, look, there's not going to be any more. Then there was a 2nd bank failure. They said, look, okay, that's the worst of it. Then there was a 3rd banking failure. Then they said, there can't possibly be any more go down. And then we saw First Republic go down, and they're still trying to say the same thing. Don't worry, everything's fine. But people, things are rotting underneath the hood. A lot of people are calling now for the FDIC to insure all deposits, because a lot of the big money, they have their money in these regional banks and they're not insured. So they're very scared. They're very worried because the FDIC hasn't changed this, and they shouldn't. You know, the millionaires and the billionaires, they don't need a bailout. I'm sure they're sophisticated enough to diversify their accounts, diversify their money into different assets. They shouldn't get a bailout whatsoever. But again, what 2 banks are in the biggest trouble right now? So listen to this. PacWest Bancorp and Western Alliance Bancorp led a deep sell-off in regional lenders Tuesday as renewed fears over the health of the financial system hit Wall Street after the 2nd largest US bank failure ever. So exactly how hard were they hit, everyone? Well, trading in both firms triggered multiple volatility halts. This is getting very worrying one. There wasn't one halt of trading, multiple volatility halts, but it wasn't enough to stop the pain. As PacWest fell 28% to a close at a record low, while Western Alliance tumbled 15%, and the pair has shed more than $5 billion in market value so far this year. That's right, everyone. $5 billion in market value evaporated like that. And not just them, the KBW Regional Banking Index dropped another 5.5% on Tuesday, the most since the crisis engulfed Silicon Valley Bank in March. But look at this. Look, this is PacWest, our Bancorp. Look at this. Their share is down 71% today. And this is exactly what we saw with Silicon Valley Bank, with Signature Bank, with First Republic Bank, and they all face the same fate. This is a chart of a company that's about to go bankrupt. Not only that, look at this. Western Alliance Bancorp, it has fallen 61% over the past year. So they are in deep trouble as well. But here's another few honorable mentions that could be facing trouble as well. So Charles Schwab, a brokerage with banking arm that's come under pressure in the recent rout, fell 3.3% amid the broader sell-off in financial stocks. Commercia Inc. and also Zions Bancorp each tumbled more than 10%, while Metropolitan Bank Holding Corp dropped 20%. So we're seeing here there's broad selling pressure across the whole sector because people are waking up, people are realizing that the banks do not have any reserves, or they're not required to have any reserves at all, and they're gambling away your money. The resolution of First Republics helps to ease concerns but not eliminate them. Wells Fargo & Co. analyst Mike Mayer said in an interview, a triple dose of negative sentiment is impacting regionals, commercial real estate, diversification, and regulation. And that's exactly right, everyone. What's happened with PacWest and also Western Alliance is they've got a lot of commercial clients. They've got a lot of big money in their banks, which are unsecured deposits. That's why investors are so worried. And also they've made a lot of commercial real estate loans. And I did a video just recently how Charlie Munger was warning there is going to be a big commercial real estate crash. And a lot of these loans that these banks have lent in 2020 and also 2019, they're now underwater, with vacancy rates rising with the commercial real estate sector and with also hybrid work. Western Alliance and PacWest are among a number of regional banks that investors have zeroed in after the collapse of Silvergate Capital Corp, SVB, and Silicon Valley Bank and Signature Bank in March. The turmoil demonstrated the threat posed to commercial lenders by asset liability mismatches and uninsured deposits. But listen to what Wells Fargo is saying. This is absolutely ridiculous. Wells Fargo CEO says regional banks are strong, but expect turmoil. I don't know about you, everyone, but that statement does not make sense at all. They're saying they are so strong, everything's fine, but there's going to be chaos and turmoil coming because these regional banks are about to collapse. Does that make sense to you? No, it doesn't. And of course, Wells Fargo is going to say this because they're a bank. Of course, they're going to say it. Wells Fargo could literally be bankrupt and about to announce they're going to fail. And right up to the last hour, they'll still tell you, don't worry, guys, everything's fine. We're very, very strong. Wall Street is wondering which bank could be the next one that needs a rescue, and that is making it easy to pick on the other regional banks. It looks like JP Morgan's deal for FRC gave us 1 day of calm for the banking sector, and regional banking stocks are still looking vulnerable until we see clear signs that emergency lending programs can go away. That's right, everyone. Look at this chart here. We can see here KBW Regional Banking Index plummeting, PacWest Bancorp plummeting, and also Western Alliance plummeting. So what you got to look out for in these banks, how many uninsured deposits do they have? Also, how much loans have they made to the commercial real estate sector? And also, when did they buy their bonds? They brought a lot of bonds and a lot of mortgages in 2019 and 2020, while they're going to have huge losses on these bonds and mortgages. And again, the Federal Reserve is likely going to lift interest rates tomorrow, and that's going to make yields on these bonds go up. It's going to make the prices of these bonds go down, so it is going to be more pain for the banks. And what happens if the unthinkable happens, or unthinkable for the markets? What if the Federal Reserve has to keep on lifting interest rates? Well, we're going to about to see this banking turmoil get turned up a notch. So part of what's driving bank shares down is the fact that many regional bank investors assumed the Federal Deposit Insurance Corp would announce a change to deposit insurance alongside its announcements about the First Republic receivership process. The level of uninsured deposits at Silicon Valley Bank and Signature played a key role in the bank run that led to their downfall. That's right, because a lot of other banks that maybe have a lot of insured deposits, customers may think, well, look, even if they go down, I'll still have access to my money. And that is, again, assuming that the FDIC will have enough money to bail out these banks. And again, like I keep trying to tell everybody, the FDIC does not even have 10% of all US bank deposits covered. They've only got 1.5%, and they're running out of money fast. So if you think your money's fine in the bank because it's insured, well, like what happened in 2008, the insurer for all those rotten toxic mortgages, they went out of business. And if all the banks go under, the FDIC will be bust as well. But I know you're thinking, well, okay, what does all this mean for you in simple terms? What this means is, everybody, we're going to see more bank failures, and what this is going to lead to, which I'm going to do another in-depth report soon on, this is going to lead to, and it is happening now, a massive credit crunch. We're going to see, like what happened with Wells Fargo a couple of years ago, where they shut down all personal lines of credit. That's going to be happening. They're going to turn off people's credit cards. They're going to stop people spending on their credit cards. And they may even start calling in loans. Yes, the banks do have that option sometimes, especially here in Australia. This happened quite a lot, where, for example, a customer had a mortgage with a bank, and then they'll say, look, we've done a risk assessment on your loan. We think you're too risky now as a borrower, so you have either 30 days to repay back this mortgage or find another lender. And trust me, when the banks get desperate for cash, these things will start happening. So everyone, this week is going to be crucial for the banking sector. It's also going to be crucial what the Federal Reserve does, and it'll be crucial for the markets. So you definitely want to be prepared because things are about to get crazy. But everyone, what do you think about all this? What do you think will happen? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.